Hi everyone and welcome to today's video. In this video, I'm going to show you how I was able to catch this trade using a simple structure, liquidity and point of interest. So if you are new to this channel, I would like to invite you to kindly hit on the subscribe button to subscribe to this channel, and also don't forget to turn on the notification bell in order not to miss any further video update from this channel. So as I said, I'm going to show you how I was able to catch this trade on VIX 25 index, and then you can also follow these steps in your analysis on any of the currency pairs of your choice. Alright, so before I start with the analysis, I want to show you these trades to tell you that I've actually took this trade. I will share the screenshot of the MT5 trade I took, and then we can continue. All right, so this was the before trade screenshots. Actually, I couldn't screenshot this trade when it was playing around this level. I made the market around this level. That was in the evening. By then I was about to sleep. I opened my chart and did this analysis. So I made the market playing around this level. I then marked my point of interest. I then marked my liquidity zone, and then as you can see, price came and tapped exactly at that point and then continued to buy. So as you can see, I've marked this level to be my what? To be my 1:3 RR, because I always risk 1:3. And then if I see the setup can continue, I can leave the rest to run. That is by taking partial. But in this trade, actually I closed at this 1:3, even though I expected the market to come and take this high, but my system said I should close at 1:3, so I closed at 1:3. So I'm going to show you how I was able to get this trade. All right, let's go back to the trading view. So before that, let me cancel everything. I'm going to remove all this, and then we will start with a fresh chart. Good. So now, first thing I did was to go to the 1 day time frame. That is the daily time frame. And by looking at this time frame, I could see that price was in an uptrend here. Price was in an uptrend, even though it's still on an uptrend. Yes, it was still on an uptrend on the daily time frame. And then what did I do? I actually marked this as my last break of structure, and then another break of structure around this level. So on the daily time frame, price came and took out this last low that gave us the break of structure. So initially I was planning to sell. I even took a sell. That was on the 27th of this month, that is June 2025. I took a sell from this zone. Price gave me the whole of this, but I was expecting price to come to this zone for my 1:3 risk to reward, but later price reverses and came and hit my SL. Even though it gave me around 1:2 risk to reward, it later reverses and hit my SL. So now I went to the 1 hour time frame and now realize that price is about to continue its move. Price was about to continue its move, because on the daily time frame we were able to see this point of interest, that is a demand zone, and then price came and tapped on it. That is the daily time frame demand zone. Price came and tapped on it, which gives us another candlestick confirmation on the daily time frame, which is the morning star. These three candles, that's morning star, and a morning star is a bullish reversal candle. So this was what I saw on the daily time frame, and then I realized that price is about to continue its bullish momentum. Okay, so now let me go to the 1 hour. Actually, I took this trade by doing analysis on the 1 hour time frame. So good. So now look at something on the 1 hour time frame. On the 1 hour time frame, when price came and mitigated the 1 day time frame demand zone, it started giving us some bullish momentum. Here, this was the last break of structure to the down. that is using the substructure. We have different type of structures. If you don't know about this type of structures, I have a full video on that. I will link it in the card. You can click on it and then watch and understand the different type of structures. So this is a substructure, and then this is a minor structure. When you watch that video, you will understand. So now the last break of structure on the substructure occurred around this zone on the 1 hour time frame. So now price came and took that high, which gave us a break of structure, giving us a change of character on the 1 hour time frame. And when a change of character occurs, what do we expect to do? Let me label them for you to see. So this one gives us a change of character on the 1 hour time frame. And then when a change of character occurs, what do we need to see? We need to see price reversing back, then mitigate the demand zone it's left, or a point of interest that is left, and then continue to east currents or east direction. That is if price is about to continue with the bullish trend. So after seeing this change of character, what did I do? I also saw this break of structure. So when you go to the video that I will be putting in the card or in the description below, you will understand how to get a trend, beginning of a trend, that is using the market structure. So now to get a beginning of a trend, or to be able to be convinced that a trend or a new trend has begun, you should get a change of character, or first you should get a liquidity sweep. When you watch that video, you understand. The first thing is to get a liquidity sweep, and yes, our liquidity sweep, this candle swept the last low and then with a wick. And I told you in that video, I made mention that when a candle sweep the last low or the last high with a wick, that is the beginning of our new swing low or swing high. And in this case, this candle swept the last low. This bearish candle swept this last low of the bullish candle with a wick, making this one to be a liquidity sweep. So that is the beginning of our bullish trend. All right, and then the next one we need to see is the change of character, and this has already happened here. And another thing we should see is a break of structure after getting a change of character, and this is what we have here. Good. So now when I saw these two or these three confluences, I knew very well that price is now about to continue with its bullish momentum, because on the daily time frame, price is on an uptrend. It came and mitigated this daily demand zone and is now continuing to go to the top. That is by following its initial trend. All right, so when I saw this, what did I do? I marked my swing low here, and then I also came and marked this high, but by then I couldn't confirm this as my swing high, because in order for me to get a swing high on the daily time frame, the price has to take this last low, but price couldn't do that. So I was expecting price to take this high and then come and takes this last low if only price is about to go in a bearish direction, but that didn't happen. So what did I do? I marked this as my high, but this one has already been confirmed as my swing low. So now in order to get my entry, because on the 1 hour time frame we could see that price has mitigated all these zones, good. By then price was around here, was trading around this zone. By then price was trading around this zone. So now what did I do? I went to the 15 minutes time frame. On the 15 minutes time frame, this was where we had our last analysis. By then price was trading around this zone. So now what did I do? I now looked at the structure that this minor structure is forming, that is those internal structures are forming. So here price has mitigated this zone, and let me show you something. Price also came and mitigated this point of interest, and then went and gave a break of structure. This is 1 hour break of structure, and within the 1 hour break of structure, when I come to the 15 minutes time frame, we have this break of structure. So when you have a break of structure, what do you expect? You expect price to come and mitigate the point of interest. But in this case, let's look at something. When price mitigated this point of interest here, it left another point of interest unmitigated here, and that point of interest had what we call a liquidity sweep. And there are three characteristics of a point of interest, a high probability point of interest. First, it must have a liquidity sweep. Second, it must play within a key support or resistance level. And the third one has to do with it must have a fair value gap, or it must be inefficient, because if a point of interest is already efficient, meaning it has already been mitigated, likelihood of that point of interest playing out is very low. So now when you look at this, price has mitigated this point of interest, and then it left out this point of interest with a liquidity. Why did I say it has a liquidity? Because this candle swept the last low. Look at something like this. Let me zoom it for you to see good. When you look at this candle, this green candle swept this red candle with a wick. So this one now became a liquidity sweep. So this point of interest is a high probability point of interest. It has a liquidity sweep. It plays around a key support zone. This is a key support zone, and also has a fair value gap. That is inefficiency. So now I take this low as my 15-minute swing low, and then let me show you something. So now this is my 15-minute swing low, and then by then price was around this level. Then the minor structure, when you watch that video, you understand what I mean by minor structure. These are the minor structure, the internal structures formed within the main structure on the 1 hour time frame. You know, this is our 1 hour change of character. This is another 1 hour break of structure. But within that 1 hour break of structure and change of character, we have a 15 minutes minor structure, internal structures. So when you look at this is a break of structure, 15 minutes, and then this is another break of structure on the 15 minutes time frame. And in order for us to confirm a swing high, we must see price taking out the last low that gave us the break of structure, the last break of structure. So in this case, this is the last low that gave us the last break of structure. So now price has taken out this low. I made this market when it was around this zone. So I was able to confirm this zone as my what? Swing high on the 15 minutes time frame, as a swing high. When you watch that video, you understand what I mean by swing high and swing low. So now this is now my swing low on the 15 minutes time frame. This is now my swing low. So in this case, my trading range is between this zone and this zone. So now what did I do? After spotting this point of interest with a liquidity sweep, and then with an inefficiency also playing within a key support zone, now what did I do? I just marked that zone, and then what? Put my pending order around this level. Then I targeted this as my SL, taking notice of this low also, even though it has been mitigated, but I take note of that. And then my take profit, I targeted the whole of this because I expect price to come and take that swing high. But mostly I target 1:3 risk to reward, and in that case, this was where my 1:3 risk to reward occurred. And as you can see, price actually came and hit that, and then continued to even give me up to 1:4, and then started reversing. So now this is what we have currently. Price is now around this zone, and from this zone we could see that we can also have another trade around this zone, because this is a substructure and it is a minor structure. So when you look at this, you could see that the price gave us a change of character, that is internal change of character. It then broke structure also, and then when you look at this move, the whole of this move, they are efficient price action, because we don't have any fair value gap or any inefficiency within. But where did we have an inefficiency? Here which price has already mitigated again. When it came for the pullback, you will see that price came and mitigated it. So now the only place that we are expecting to get inefficiency is this zone, where price is currently trading, and it has also swept liquidity and then broke structure. So now this one can be our inducement. Good, I didn't show you my inducement for the first trade. Good. So for the inducement for the first trade, we could see that after this inefficiency, we have a zone here. It has been mitigated, and then we have another zone which has inefficiency above. That is a fair value gap. So most people who are not aware of the liquidity trading concept, or who are following the basic SMC concept, will take this last bearish candle which has fair value gap in between it to be their point of interest, which in this case it is a trap. So we, those who trade the advanced smart money concept, that is the liquidity trading concept, we consider this as a trap or as an inducement. So in this case, I consider the whole of this as an inducement. So now I bring my inducement here because I know most people will be taking their trade around this zone, because an inducement occurs when a point of interest is too obvious. So when you look at this point of interest is too obvious. Anyone can spot this point of interest, and the smart monies, that is the big players, they want us to see point of interest that are too obvious. So when the price got there, you see it bought small and then took out those who placed their orders here. So anyone who placed his order here is likely to put his SL here or here. So for us that trade smart money advanced concept or the liquidity trading concept, we consider those zones as what? As inducement. So most people who are going to take their buys here, there will be an inducement for us to enter our trade on the extreme zone. And then what happened? That was what actually happened. When price got there, it bought and even gave us this bullish engulfing candle, so giving a hope for those who trade candlestick pattern, as this is a buy setup. Most people who trade candlestick pattern will also take this trade as their buy setup, because it also occurred at a key support zone. This bullish engulfing candle, the bullish candle engulfing the red candle, they also take their trade here, which we all use them as inducement or liquidity. That is why you should understand the liquidity trading concept. So once you understand that concept, you go and watch that my video. I showed you how to spot all those things. I will leave it in the description below. Once you understand it, then you are able to spot this inducement. You are able to spot this inducement and this inducement. Then you can take your point of interest to be below them. Once they have been liquidated, now you can enter your trade. And that was what happened here. After they've all been liquidated, I then entered my buy setup, and here I am. I hit my first take profit, and the second take profit is almost hitting. That is about one pip left for it to hit, and then it started reversing. So that was where I had my inducement. This was where I put my inducement. I label it as IDM. Good. So this was my inducement, and now I was explaining this. The whole of this point, let me remove this one here. The whole of this point, this is a change of character, break of structure. That is internally minus structure. When you watch that video, understand what I mean by minus structure. So these are minus structure. So this point of interest has been mitigated. The only remaining point of interest is this one, which has inducement around, and price is currently reacting to it. Price is currently reacting to it. It has already tapped on it. So if I'm to take my trade, I will have taken it from here. Then I will still target the swing high. And in this case, I have to put my SL just below this, and then I will get my 1:3 risk to reward, and I'm good to go. So this is how I was able to get this trade. And if you want to learn more about this, you can watch my other video on swing high and swing low, or on market structure, that is the LTC trading concept, and you are good to go. I hope you find this video helpful. If you do, please don't forget to subscribe, like and share. Thank you for watching. Have a nice day. Bye.